Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Let's take a look at the equity markets this morning. Equity markets are kind of flat, but generally pretty much the uptrend continues. Last week we had the NASDAQ hit another all-time high. The S&P 500 hit an all-time closing high. We're off a few points today, and the Dow Industrial is less than 1% off its highs. And what we continue to see is strong institutional accumulation. And the way we measure that is if you take a look at the weekly charts of the S&P or the NASDAQ, you'll see since the start of the year, all the weeks when the S&P or NASDAQ's been up, the volume's been very strong, and then the weeks when it's retraced, the volume's been weaker, and that's a sign of institutional accumulation. Also, over the last 2 months when the indexes were moving slightly sideways, NASDAQ's been moving up, but if you look at the S&P and the Dow, the action's been very tight, meaning on a weekly chart, the closes come in a very tight range. And again, that's a sign that there isn't much supply of stock coming in to be sold into the market, and there is a lot of support for the market. So that's one thing we're looking at. And also get a gauge of where the markets can continue to go. So it looks like they're going to continue to climb. Well, what we want to do is take a look at the S&P 500 sectors. So right now, we have 8 sectors kind of continuing to win while 3 are losing. So let's break this down a little bit. So the best performing sectors year to date have been technology, that's the XLK, consumer discretionary, XLY, the industrials, XLI, and healthcare, XLV. And that's important because they comprise about 57% of the S&P weighing. Now sectors that have been kind of neutral throughout the year have been XLB, which is materials, XLU, the utilities, and XLS, the consumer staples. So that's pretty good because they're moving sideways. In fact, recently the utilities and consumer staples started moving down. That's what you want to see in a growth market going forward. You want to see those kind of not be the place where the money's really flowing, but you do want to see all stocks participating at the same time. Now the laggards so far year to date have been telecom, real estate, and energy. Telecom, real estate only comprise a small section. Those two combine only about 5% of S&P 500 weighings, whereas the energy is about 8%. So that is a bit of a drag right now on the S&P 500, and yet the S&P still continues to do well. Now lastly, one of the more important sectors is the financials. Now the financials themselves are the second most weighed sector to the S&P 500. They comprise about 16% of it, which the leader technology is 20%, as I mentioned earlier. But so financials comprise about 16%, and they've kind of lagged behind the S&P 500 so far this year. So that's the bad news. However, the good news is since the lows in the April, so when the XLF hit the lows, it's been actually recently now outperforming the S&P 500. So the reason I mention this is because this is what we gauge to get a better view of what can drive this market higher. If we start to see the financials improve greatly, and that's an important sector because that includes the banks and insurers, and that's good for the economy, then the S&P will probably push higher, assuming, of course, technology and consumer discretionary continue to do well. Or if we get a bump from the energy sector is looking very weak, but even if that started to rally off the bottom also, so those two sectors indeed can push the markets a little bit higher. So just as a note too, so far for the first quarter, out of the S&P 500 companies, 414 have reported so far. Over 73% of them have beat earnings, and earnings have been growing 15% year-over-year basis. That's very strong. So combining all these things I just talked about, these are the things you want to look at, and these things could possibly continue to drive the market higher. But as always, let price and volume be your guide. This is George Kachuk for RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.